most important topic, which is excise tax audits and how excise tax audits impacts taxpayers, which is excise taxpayers in the UAE, and practically how do we navigate through the audit process. So with this in mind, let me just quickly show you the agenda for today. Just bear with me. So today we'll go through the introduction, a few key facts on excise tax, some statistical data as well. Then we'll walk you through the key concepts on excise tax, which includes the scope of excise tax, what goods fall within the ambit of excise tax, exemptions and deductions, and we'll try to demystify these concepts. And lastly, one important concept, which is the warehouse keeper as well. We'll briefly touch upon these four key concepts. Then we'll jump onto the topic of excise audits. And finally, the fourth and the fifth topic is where we'll talk about litigation recovery proceedings that the FDA would initiate and the penalty proceedings as well. The last but not the least, we'll finish off this webinar with the common areas of pitfalls and the points that taxpayers must keep in mind when they are an excise tax player. Lastly, we'll open the floor 10 minutes perhaps for a Q&A round with all of you. So yes, welcome everyone. And now I'll hand over the microphone to my colleague Ashima. She's just sitting next to me. And she'll walk you through the key concepts. Thank you, everyone.
Hi, everyone. I'm sorry. Hi, everyone. Good morning. Thank you for joining us in this webinar on a Friday morning. Let me quickly start with the basics of excise tax and how exactly we understand that the scope of excise tax is. So we start with the scope of excise tax. The excise tax has been levied by the UAE government with respect to harmful products. So they want to curb the consumption of unhealthy and harmful commodities such as carbonated drinks, alcohol, and your tobacco, cigarettes. So they have levied excise tax of around 100% to 50% on various products, and the entire burden of this excise tax lies with the end customers, so that they have to pay higher prices for excise tax. Then next we are discussing like how the excise has grown since its introduction from October 2017. So the registrants in the excise tax were initially to 309 in 2017 when this excise was implemented by the UAE government, and by the end of 2022 the registrants number has increased to 14,169. And similarly, the number of registered excise goods has also increased from 3,000 to 30,000, which is a big jump within a span of only 5 years. That means that UAE government is quite vigilant on how the excise goods are being produced or manufactured in the country, and they are ensuring that they are being registered with the excise authorities. And the number of returns that has been filed after the Emara tax portal was launched by the FTA government, it was 390,000 excise returns were filed since 2017 till date. These were the statistics about the progress in the excise tax. Now looking at the defaults at your screens, you can see like a big chunk of numbers, like 14 million is a number which has been seized goods for tobacco products by the FTA, which do not bear digital stamps. And similarly, there is a number of 2.9 million which is non-tobacco products, which has been seized by the FTA, which includes your carbonated drinks, energy drinks, and sweetened drinks. Again, that reflects that how FTA is being careful in the market about noticing like what goods are being circulated, and specifically which of these goods are excisable goods and how they are being compliant with respect to excise tax. So I guess enough with the numbers now, and like we will now discuss about like how the excise tax actually works and who is actually liable to excise tax. So excise tax is a consumption tax, but this is not principally applicable to on all the persons like distributors or maybe the wholesalers or retailers. Excise tax is a tax which is levied at only one stage, which is either at the production or at the import. So there's a very limited ambit of application of excise. As you can see on the screen, there are principally four categories of taxable persons who are subject to excise tax. Starting with the importers, like if you are importing the excise goods, we will discuss subsequently like which goods are in the ambit of excise. But if you're importing those excise goods, you will be subject to excise tax at the time of import itself. Similarly, if you are a producer within the UAE, and if you are producing or manufacturing the excise goods, then you will be subject to excise tax. And there's a concept of release for consumption. To briefly explain you what a release for consumption means, release for consumption is not necessarily means that the goods are actually sold by the manufacturer. The concept of released for consumption means when the goods are ready for the retail sale or they are ready to be consumed, if not for retail sale. So that means if you are producing something which is excisable, but which is not actually being sold by you, it will still be subject to excise tax, irrespective of its actual sales incident. Then the next taxpayer that is within the ambit is warehouse keeper. Warehouse keeper is again a person who has a license to store goods in the warehouse, and it has to be within a specific designated zone. Designated zone can be a free zone or in the mainland itself, subject to certain conditions that has been imposed by the FDA to qualify a um, particular warehouse to be a licensed warehouse for the purpose of excise taxes. Not all the warehouses can be categorized as excise warehouses. You need certain set of permissions and you need certain set of licenses to operate as a warehouse. Merely staying at a particular designated zone or a free zone in the UAE does not necessarily means that you are in a designated zone for excise perspectives. And the last category is the stockpilers. Stockpilers are the person who are storing the excise goods. Again, this is subject to certain conditions, and there is a specific formula prescribed in the law, which gives a number or quantity of goods that can be stored by a stockpiler. And if you're storing in excess of such quantity, then you will be subject to excise tax on that excess quantity itself only. So with that, we covered like who is a taxable person for excise tax, and now we will discuss about what is the scope of excisable goods for excise tax. So principally, we do not have a lot of products right now within the ambit of excise, but there's a limited category. That being said, it's not easy to identify these categories because there are a lot of conditions imposed with the excisable goods. Currently, when the excise tax was implemented, there were three categories of good that UAE government imposed excise on, which is energy drinks and tobacco products at the rate of 100%, and carbonated drinks with 50%. But looking at the evolution of drinks and tobacco products like electronic devices, vapes and everything are still there in the market with respect to tobacco, and sweetened drinks are as harmful as carbonated drinks. So looking at the scope of this, in December 2019 via cabinet decision, UAE government expanded the scope of excise tax, and electronic devices along with the smoking liquids are being subject to excise at the rate of 100% for now, and sweetened drinks are subject to 50%. So sweetened drinks again needs to be identified separately because there are some GCC standards that needs to be taken care of to identify whether your product is a sweetened product or not. And if you meet those GCC standards, and your product category is considered to be a sweetened drink, then you will be subject to excise at the rate of 50%. So this is principally the main scope of excise tax. So excise, there are certain exemptions and deductions as well, uh, basis which you will not be able to maybe pay excise at the very moment of production. So for example, if you're producing excisable goods and those goods are meant to be exported, so law provides an exemption that you are exempt from payment of excise if those goods are exported. Exports can be of two categories. They can be direct export or indirect exports. Direct exports are goods which are physically exported by the supplier or like producer itself, and indirect exports where your customer is arranging for the physical supply of goods from outside the UAE. But you cannot claim the export exemption directly. You need to maintain certain set of documents, and the goods needs to be physically moved. Just intention to export goods while production is not sufficient, and you need to maintain certain set of goods such as your bill of exit and your actual export documents, your transportation documents, your custom declarations. So there's a whole list of document that needs to be maintained, and if those documents are not available with you, then export exemption becomes difficult to be difficult to claim. The next exemption is between the designated zones. As we touched upon previously about the taxpayers, so warehouse keepers and designated zones work together. Designated zones are particularly certain areas or geographical locations which has been identified by the FTA as a specific zones which needs to be securitized for the movement of people as well as the movement of goods, and there needs to be proper security measures on entry and exit of people who are accessing the locality, and as well as the goods which are stored in those localities. Along with that, there is a additional condition to be categorized as a designated zone for exemption as well as for excise, which is it needs to be operated by a warehouse keeper. A warehouse keeper is a person who overall looks upon this designated zone, and we will discuss in brief about warehouse keeper separately. But for warehouse keeper, you need a separate license. And unless you meet all these conditions, that is, it needs to be a designated area by the FTA for excise, it needs to be securitized, and it needs to be operated by a warehouse keeper. And it could be, of course, between mainland or in a free zone. It can be in either of the location. And if you're meeting those conditions, and the movement of goods between one designated zone to another designated zone is subject to export excise exemption. And there's one more thing that you need to take care of, that this excise tax exemption does not apply if the movement of good between two designated zone is for consumption purposes. So if you're releasing the goods within designated zone for consumption within the designated zone, then it will be considered to be consumed in a designated zone and subject to excise at that moment only. Deductions, as the name suggests, it's basically when you, because excise is not a tax which is levied at each level. Excise is a one time levy and it's levied at the time of production or import. So if you're using some products which are subject to excise, for example like tobacco leaves, which are a product to be used for production of cigarettes, and you have already paid excise on those leaves, then when you are making the final product of cigarettes and then those are being sold and you are paying excise, you are eligible to claim deduction of excise whatever you have paid on those leaves. Similar concept applies if you are not procuring them locally or importing such goods. So the next concept of deductions is interlinked with exports. So deduction is applicable when there's a difference in the period of actual export and production. So export exemption is applicable when you're producing the goods within the same month. In the first scenario, what we are discussing here, if you're producing energy drinks in the month of January and you're exporting such drinks, the produced drinks in the month of January itself, then the exemption will apply and you will not be subject to excise in that particular month itself. Now, coming to the different tax periods, if you're producing goods in January and those are being exported in June, so there's a timing difference of 5 months, you can see here. So, in this particular case, you will need to pay excise in the month of January at the time of production, and once you export those goods subsequently in the month of June, you can claim deduction from the excise liability, which is due in the month of June. Because export exemption or deduction is applicable only when the goods are actually physically exported outside the UAE. Mere the intention or just because you are producing it and exporting in the subsequent months, it's not a sufficient compliance with the law itself. And then the lastly, what our example shows is that if you're producing goods and you wanted to export them, but such goods are expiring before you actually wanted to export it and they are not fit for export, then you cannot take any export deduction or exemption, and you need to pay excise at in the period in which those goods were actually produced. So this needs to be taken care of, like when you are exporting the goods and when you are claiming the deductions, you need to be very careful about how the timing makes a difference here in your export liabilities. Okay, this is a very interesting topic and a little confusing as well for people. So warehouse keeper is not merely a person, it's a a person who needs to operate in a designated zone, because a designated zone without a warehouse keeper is incomplete compliance to claim deductions or exemptions from a designated zone perspective. Like, a person needs to first obtain a warehouse keeper license, which allows them to operate in a designated zone. Then they need to provide a financial guarantee as well, because principally warehouse keepers are not liable to pay excise unless the person who is sending them the goods has made a default in payment of excise. So that's why they need to provide a financial guarantee to the FTA, because FTA can use this financial guarantee in case of any defaults being made by the warehouse keeper itself. Along with that, FTA imposes conditions on those warehouse keepers, which can include like what are the type of goods that they can store, what is the maximum quantity they can store in their warehouses, what is the security level that is needed, like what are the security measures and up to what level security needs to be taken care of. So they apply conditions on those warehouse keepers, and such warehouse keepers need to adhere to those conditions, because any non-compliance with such conditions can result in revocation of such licenses being provided. And as I already said, warehouse keeper are not principally liable to pay excise duty. But if somebody has made a default in the chain before the goods came to warehouse keeper, then they will be subject to subject to excise duty. And the main function of a warehouse keeper is to overall supervise and control whatever excise goods are being located in a designated zone. The purpose of this particular condition is because the excise is being exempted when you're transferring goods between two designated zones. So the FTA wants to have an overview of what is being stored, whether all the security measures are being taken. Because if any violation happens, then in such situations, you're subject to excise tax. And that is the whole uh, purpose of giving them licenses, obtaining financial guarantees, and providing excise exemptions. And of course there are certain records that needs to be maintained, like if you're storing goods in designated zone, which should essentially which will essentially suffice that you are transferring the goods between the designated zones, or it is available for consumption. And if your record suggests that the goods are not merely transferred between the two designated zones, and they are being released for consumption, that at that particular moment the excise will be levied along with any penalties for late payment of excise tax. So this is pretty much the entire overview of a warehouse keeper and how it is being handled at an excise level. So I'll just pass the mic to Nirav to take you through audits and assessments and how they are being handled in excise.
Thanks a lot, Ashima. So practically, yes, excise tax, has been in UAE since October 2017, and as Ashima already, walked you through the concepts which are key, but not the only concepts which are covered within the excise tax law. It goes on beyond, obviously, these four key pointers. There are a lot more angles and a lot more things which are mentioned in the law. For example, on what price should we calculate the excise tax? When is the liability due to the authorities? What declarations should be submitted? There are also concepts in terms of digital, tax stamps, which should be attached on tobacco products, for example, and so on. So a lot more concepts are embedded within the law. And now that we are already in the 7th year of excise tax, law, we are seeing and experiencing more and more audits being undertaken by the FDA. And therefore, this next section is just to let you know very briefly the process in terms of the audits which are conducted by the Federal Tax Authority in the UAE. So it all starts with, a notice of tax audit. So generally, the FDA issues a notice, which could be over an email as well, trying to announce or trying to kind of, throw in that, okay, they are going to come and audit the particular taxpayer. Generally, the notice is issued within 10 days prior to the tax audit being conducted. Once the auditors, come to the office of the taxpayer, they are going to come and collect several things, including relevant documents. They could collect data and records pertaining to the inventory, because in most scenarios, inventory is where errors could lie, and the FDA is very well aware that there could be errors in such inventory record keeping, and therefore they target the inventory records as well. In addition to that, they not only stick to something which is provided by the taxpayer, but rather they could go beyond and they could ask for the access to the ERP systems where the inventory in the background is recorded electronically. And if there are any differences between some records which are given to the FDA, which are recorded, for example, in spreadsheets, versus something which comes directly from the accounting system, the FDA would only rely on the data which comes from the accounting system. The third point, which also is very important, while the FDA is undertaking the audits, if they foresee that there is a tax evasion or scenarios where there is huge excise tax liability which is unpaid, they have the right and the authority to actually seize assets and documents. They can make copies of the original documents. They can retain a couple of documents and take those documents after making copies to their offices. They can also dispose of naturally perishable and deteriorating assets if they deem that action is necessary. Again, these are some rights and authorities which the FDA has. It's not a mandate that FDA is going to do that for all the excise tax players, but yes, they could do this in different circumstances. The fourth point is that the FDA, once they are going to collect all these documents, they are going to go back to their offices and they are going to actually, recalculate the excise tax. They're going to reconcile all the documents, starting with, let's say, the trial balance of the company. Then they look at the inventory records. Then they go on to looking at the excise tax declarations and finally determining what is the actual excise tax that is payable versus what is paid. All these results are particularly particularly compiled together, and by way of an audit assessment, they would come back and they would hand over this audit assessment. Practically, once the audit ends, within 10 days of that, they would come across and they would hand over this audit assessment. Now, it's very interesting here to note that what we have observed practically is that the FDA would take their own time when they are following steps 1 to 5, I would say. So effectively, they could sometimes give you a notice of an audit, or they could formally come and say that, okay, we want to start an audit and we'll be asking you for relevant documents from in a couple of weeks or so. And lastly, once they collect all the documents, they can just go missing practically for a year or 6 months or a bit more in order to undertake their own audit assessment, which is completely okay, and which we have observed that normally the FDA would take let's say a year in order to conduct their audit assessment and come back to the taxpayer. So in the 5th step, you see that the auditors are going to come back. They are going to give you a tax assessment which will indicate what is the payable tax. If there is any refundable tax, they will also indicate the refundable tax. If there are any penalties, the last step is where they would also provide administrative penalty assessment, which will practically describe what are the penalties and how the FDA calculated those penalties. And upon receipt of such a tax assessment order, such an administrative penalty order, effectively all the taxes and penalties which are demanded by the FDA, they immediately become due, and the FDA more likely than not is going to start pursuing these taxes which are unpaid and these administrative penalties which are outstanding. Now, the next step is how do we go forward and object to these findings of the tax authority, these penalties which are levied by the authorities, and what happens during the process, right? So let's look at it very holistically. We start with an audit assessment. The FDA comes, they do their audit assessment, they give you an audit assessment result, and they also give you a penalty assessment. There are liabilities due in terms of taxes and penalty. The immediate step or the immediate right which the taxpayer has is they can go forward and they can file something known as a tax assessment review request, which is going back to the FDA audit team and telling them that, look, you have missed maybe A, B, and C, and would you mind taking a revisit, taking a relook at what you have assessed and make any changes to the audit assessment. Now, this tax assessment review request must be filed within 40 days from the date of receipt of the audit assessment or the penalty assessment. Now, interesting enough, what we have also observed in practical terms, even though the taxpayer may go forward and file a tax assessment review request, a separate team known as the FDA Enforcement team would start chasing the taxpayer to pay the outstanding taxes and penalties, because like I said, the moment an audit assessment or a penalty assessment is issued, the penalties and taxes are formally due in terms of the law. While this FDA enforcement process is going on, obviously it does not diminish or does not try to curb the right of the taxpayer to go forward and still file a tax assessment review. So that will still continue. If you get a negative result out of the tax assessment review request, as a taxpayer, you have the option to go forward and file a reconsideration request. Now, again, one nuance here is that in the first step itself, the tax assessment review request is not a mandate. The taxpayer may directly choose to file a reconsideration request rather than file a tax assessment review request. But in practical terms, a tax assessment review request is a very good opportunity for the taxpayer to go back to the FDA and tell them that they have perhaps not looked at a couple of documents, or they have missed out on something which is key and which is important in order to conclude their assessment. So that is a golden opportunity, and it is possible that during the tax assessment review stage, the authorities are going to reconsider their assessment and their findings proceedings and finally come out with a different judgment altogether. Yeah, but this being said, the taxpayer could directly jump onto filing a reconsideration request. They could go and apply for a reconsideration request. Again, they have got 40 business days once they receive the formal tax assessment, or once they receive the formal result of the tax assessment review request. Yeah, one of the two. The next step, if for any reason the FDA is still going to not accept the reconsideration request, they will issue a decision most likely in 40 business days. Now, interesting thing is that once the FDA issues this negative decision, I would say again, the taxpayer has the right to formally object to this reconsideration decision, which has been rolled out by the FDA, and they can go to the Tax Dispute Resolution Committee, which comprises of 3 tribunal judges who are going to, and they are independent body effectively. So they are going to review this whole matter independently, and they are going to again roll out their own judgment within a period of 40 business days. Now, interesting enough, at this stage, before the Tax Dispute Resolution Committee, if you want to file an objection, then as a taxpayer, you have to ensure 2 things. One is that you have to pay all the due taxes which are under dispute. So that's number 1. The number 2 is that the matter, which is something to keep in mind actually, if the matter is pertaining to value which is up to 100,000 dirhams, then the order issued by the TDRC will become final and you cannot object it further. But if for any reason the matter is more than 100,000 dirhams and the TDRC is also issuing a negative order, then as a taxpayer, you could go forward and you could appeal before the competent court within 40 business days. Again, it is important to note here that the moment you hit point number 4 or step number 4, you need to go forward and you need to effectively also pay 50% of the penalties which are outstanding or which are due, at least as per the FDA. So effectively, by the time you reach step number 4, you have already paid 100% of the due taxes, and you have also, or you're also supposed to pay 50% of the outstanding penalties. Now, during this entire process or all the 4 steps, there is obviously, as you can see, quite substantial duration which is running in the background. Now, during this all 4 steps, mind it that the FDA enforcement team is still on the go, and they could still ask the taxpayer to pay the entire taxes and pay the entire penalties which were issued effectively through the tax assessment order or the penalty assessment order. Now, just to look at what happens on the FDA enforcement side. So effectively, if a person, like I said, fails to pay taxes or penalty on time, the authority will notify them that they need to settle this penalties within 20 business days. Effectively, if the penalty is and the taxes are not paid within this duration, then the Director General of the FDA can issue a decision which is effectively like an executory decision, like an executory order, effectively, making the taxpayer mandatory to pay the due taxes and penalty. Now, again, we have not formally seen the FDA pursuing this immediately, so they might not directly issue an executory instrument, but they will formally keep on pursuing through the FDA enforcement for the taxpayer to pay all the taxes which are outstanding and all the penalties, even though the matter is before different authorities and under litigation and under dispute. Yeah, so this enforcement team is not really bothered, let's say, by the fact that the taxpayer is already litigating and already disputing this matter, and the final decision is not yet given either by the TDRC or by the courts. Yeah. The third step is that once the payable tax, effectively becomes due, the DG may request for an urgent matters judge to temporarily seize sufficient assets in order to collect the outstanding taxes and penalty. Now, again, this is a very aggressive step, but in worst case scenarios, this could materialize. And you can imagine we are already 7 years in the excise tax regime, with the statute of limitation being 5 years. The FDA FDA is diligently going ahead and conducting tax audits, and they are issuing orders to defaulters, to the violators, and trying to enforce on them the due taxes and penalties. So they are not going to take this lightly. At the same time, for the excise taxpayers, they must understand, or they must recognize that the risk in terms of excise tax is not going to affect or impact them as a bottom line in their P&L, but it is going to impact them as a top line, because the excise tax percentage, or the tax percentage, like Ashima mentioned, ranges from 50 to 100%. So you can imagine an excise tax player is simply going to wipe off the entire revenue if such kind of an excise tax becomes due, or the penalties, which could go up to 300%, or in certain cases 200%, it would simply wipe off the entire business, right, of the excise tax player. And what we have also seen is the FDA is not going liberal in these situations. They are actively looking at the violators, and if there is a violation, they do not hesitate to impose penalties, and they do not hesitate to impose the maximum penalties as well. Right. Last but not the least on this slide is tax and any other amounts which are due. That obviously takes precedence over all the other funds and debtors on the balance sheet of the company. So effectively, you can imagine the implications of this is going to be significant. Yeah. I'm just going to go forward quickly to walk you through and give you an overview of the penalties. When we talk about the penalty regime, the one that you see on screen is where you go ahead and voluntarily disclose the errors before the audit kicks in, and you kind of want to rectify the errors. So effectively, any failure to register within the specified timelines to begin with is a default worth 10,000 dirhams in penalties. If there is going to be incorrect submissions of returns or failure to submit the returns, then for the first offense, it is going to be 1,000 dirham, but thereafter, it is simply going to be 2,000 if it is default or repeated within a 24-month period. When we talk about non-payment of taxes or failure to pay the outstanding taxes, the penalty just shoots up, because immediately it is 2% of the unpaid tax, and thereafter 4% per month after 1 month of not settling such taxes. Now, important point here is that while these penalties could go up to 300%, if the FDA is going to undertake an audit in between and going to issue a tax assessment and a penalty assessment order, then the penalties would freeze up to 200%. So it should ideally not exceed more than 2 times the unpaid tax. In practice, again, what we have seen is sometimes the FDA goes ahead and still applies penalties more or beyond 2x of the unpaid tax, possibly because there has been a change in the excise tax law much recently, and the FDA might still follow something which is written in the older version of the law. However, this adds to the overall atrocities of the excise tax players, because in that situation, you are now going to also rebut and try to dispute those additional penalties which are not falling within the ambit of the law, but still applied by the FDA. Yeah. Important also to note that the moment the FDA is going to start an audit, and at that point in time, if the excise tax players goes ahead and files VDs, the penalties are obviously going to significantly go up in terms of meeting this 300% threshold, and it might just make things worse if not easier. Yeah. Now, there is also something known as tax evasion. When we talk about tax evasion, the penalties go up to 300% of the tax evaded. And what we have also observed that sometimes the taxpayers in the movement of being imposed with heavy taxes and heavy penalties demanded by the FDA, they may be compelled to take steps to try and secure their assets, try and make certain restructuring arrangements to secure their assets, particularly, and their funds, right? And that also in itself is a very dangerous thing, because the law still has liability clauses, which goes beyond formally the taxpayer. So if there is another person who is helping such a taxpayer to avoid taxes, to evade taxes, then the liability would extend to that other person as well. So again, we should not take the penalty provisions lightly. As we know, so far we have practically not seen the FDA going after and imposing tax evasion penalties till date, at least in our experience. But we have formally seen huge penalties being levied by the FDA on matters which are still under litigation and yet not resolved. Yeah. So now let's quickly talk about certain areas and pitfalls which are common and which we have seen time and again, where excise tax players default, and finally also look at certain things which are to be considered by excise tax businesses. So taking it forward, what are the common areas of pitfalls? Now, these are four broad categories. These are not the only ones. But for the time being, we have segregated the common pitfalls into four broad categories. The first is stemming from the lack of clarity in the application of the excise tax law. Also, keep in mind that the law has been, updated. It has been amended. There are several cabinet decisions which have been rolled out, and there are still, even though we are sitting in the 7th year of the excise tax law, there are still areas which are not amply clear in the law. The next category is incorrect claims. There are situations where, because of, let's say, stemming from the lack of clarity in the law and lack of guidance sometimes by the FDA, excise tax players have maybe assumed or presumed a few things and claimed, a few, let's say, deductions or exemptions incorrectly, leading to either incorrect deductions to begin with or timing differences. But because of these kind of incorrect claims, there could be huge, repercussions, leading to enormous penalties as well. Next in line is the complexity in compliance. So now this cannot be ignored, because excise tax comes with several compliances, including digital tax stamps, including several excise tax declarations that must be submitted by the relevant excise tax players. And like Ashima already mentioned about the warehouse keeper, it's a category in itself which needs a lot of monitoring to begin with. And if there are any defaults, it could lead to, again, significant taxes and penalty exposure. Last but not the least, invoicing and record keeping. This is one of the most common area where excise tax players may, not focus, and this could lead to a lot of negative repercussions, especially as I mentioned earlier, in terms of reconciling what is there in the ERP systems versus what is maintained, for example, in spreadsheets, which is what we've seen in common as a practice followed by excise tax players, and then going on to the submission of the returns. All the three practically should reconcile with each other. If they don't, there is a high chance that something has been missed out, or something has been missed out in terms of claiming a deduction or an exemption, or there is due taxes which are now supposed to be payable, right? And that would lead to penalties again. Now let's take a quick look at each of these four common pitfalls. First is the lack of clarity in the application of the law. Now what you see on screen is common misconceptions. These are let's say myths which we are trying to bust. And we are trying to say that, okay, look, excise tax is not formally sale of excise goods. Whenever there is going to be a sale of excise goods, doesn't mean that the excise tax is due. Practically, like we already explained in the first 15 minutes of this webinar, that excise tax could be due on different junctions and different point of taxation, starting with the importation of the goods, starting with the production of the goods. It could be stockpiling of the goods, or it could be when there is formally a release of excise goods into free circulation in the mainland UAE. So it's not necessarily tied to sale of excise goods. The second myth is entities which are located in a free zone, excise tax does not apply to them. This is a highly, I would say, misconstrued concept. A lot of players in the business, they were not very clear about what happens if they are sitting in a free zone? They have practically assumed that the moment they are sitting in a free zone, maybe they are sitting even in a designated zone, and simply they assume that excise tax does not apply to them because they're sitting in a designated zone or a free zone. Again, this is a myth. This is not true. Excise tax practically is not tied back to the designated zone, but rather it is tied back to a warehouse keeper who is practically possibly sitting in a designated zone in most likely scenarios, but who could still be in the mainland if they meet certain conditions in certain scenarios, right? So that's a common myth, and excise tax players should look at this point minutely. The third point is export by anyone in the distribution chain leads to excise tax exemption. This is also something which we have commonly picked up. A lot of excise tax players are practically assuming at times that if somebody in the distribution chain pays excise tax, then they are exempted from paying excise tax. This is not true. You have to determine as an excise tax player what is your role. Are you an importer of excise goods? Are you the producer of excise goods? Are you a stockpiler, or are you somebody who is releasing excise goods for free circulation in the mainland UAE, right? And depending on your category, depending on your obligations, you have to go forward and meet the excise tax obligation regardless of what another person might do in the distribution chain. Yeah. The fourth point is the timing differences in terms of export versus excise tax exemption available. Now, this is an interesting one because what we have also picked up is that exemption of excise goods and exportation, or for example, deduction of excise goods, sometimes is read interchangeably, which is not true, because exemption happens when there is immediately, for example, an export. It could be a direct or indirect export. At the same time, exemption would happen immediately, but at the same time, deduction would happen post scenario. For example, when an excise tax payer produces an excise goods, formally that good stays in the warehouse for a couple of months, and then after a couple of months it is exported. In that scenario, effectively the excise tax is due upon production, and when formally the goods are exported outside the UAE, it is that time that the excise tax payer could effectively claim the deduction of the excise tax which was paid at the time of production, which is like a deduction. So it is important that these timing differences are again minutely picked up, because if we make an error again, even though it is a timing difference, and the excise tax authority or the federal tax authority might not really lose on the revenue, but we have seen the FTA not going liberal in these situations, and we would still go ahead and see huge penalties and huge tax liabilities due in certain scenarios. Yeah. Next is very quickly, producing excise goods for exports is again not mandatorily, a registration is not required. That's not the case. The moment you produce excisable goods, effectively, regardless of whether it is for export or local consumption, registration would still kick in. Next is release for consumption is equal to sale to the consumer. No, that is again not true. It's a myth. The moment the goods are released for consumption, for retail sale, regardless of the fact that it is immediately to be sold to the consumer, or they are going to be still stored further and then will be sold ahead in time, it is simply going to be released for consumption, and excise tax should be due at the time of such release for consumption. Next in the line is warehouse keeper effectively is sitting in a free zone and a designated zone or a designated zone, and such a situation would simply lead to being a warehouse keeper. That again is a myth. It's not the reality. For being a warehouse keeper, you need to comply with several conditions, including having a financial guarantee given to the federal tax authority based on stock of goods which are to be maintained by the warehouse keeper, and meeting several other conditions, including being in a fenced designated zone or a fenced free zone. Yeah. So again, that is very important to note. There are a few other things on the screen, but we are running short of time. I want to also open the floor for a Q&A. I'm just going to quickly browse through these in terms of incorrect claims, invoicing and record keeping. It is important time and again to observe and notice that all the documents and all the deductions which are claimed or any exemptions claimed in the excise tax returns, they are effectively reconciled back to the financial statements, regardless of the fact that the FDA may ask it or they may not ask it. Because the moment it is reconciled, as an excise taxpayer, you are very sure that you are, foolproof. You are not in a space of violations, and you are avoiding any taxes due or any penalties due on any such violations. So it is very important that you claim everything correctly and you reconcile the documents. Last but not the least, compliances has been the only way the FDA effectively monitors the enforcement of the excise tax law, and it should not be taken lightly. In terms of adapting with the ever-changing evolution of the excise tax law as well, it is very important that complexities are handled correctly and all the correct compliances are being met by the excise taxpayer, in order to avoid any failures or penalties. Now, certain key points to consider. I think you've by now already gauged all the common pitfalls, and obviously the points to consider stems from these common pitfalls. And as you can see, I'm just going to talk about a few. Classification of the excise goods, again, is a very predominant thing, very important thing, because like Ashima as well mentioned, that there is something known as a GCC standard. So one must keep in mind the GCC standards, the rules which are in the country, in the UAE, and then effectively classify the goods and classified in the correct category of excise goods. It is also important to observe what is a designated zone, what is a warehouse keeper, again, and when would we get into the warehouse keeper practically, like an exemption or a safe harbor rule, right? Again, several conditions are embedded in the law. There are separate clarifications published by the FDA on these topics, including calculation of the financial guarantee, for example. And one must go in detail and take a look at those specific clarification, those specific rules, in order to ensure that they continue meeting the requirements of a warehouse keeper, so that excise tax is only due upon release for consumption rather than when the goods are kept in the warehouse itself. On the left, also, I want to pick upon ensure accurate tracking of production, storage, movement, and export of goods. Again, this goes back to the point which is on the right, which is reconciliation of your physical stock ERP records. It's all effectively tied up. You may see several points, but they're all tied up together in simplicity, or for the lack of better word, in simple sense, they're all one and the same. As an excise tax player, you must ensure that everything which is physically happening in the excise tax world, starting with the production, starting with the importation of goods, then the production, then the storage, movement of the excise goods, and lastly, the export of excise goods, if any, they're all tied back, and they are all supported by relevant documents. They're supported by relevant record keeping. The ERP systems are up to date. And lastly, and the most important thing, whatever declarations are submitted to the Federal Tax Authority, they are aligned to everything which is in record in the background. Any mismatches between these records are bound to create issues. They are bound to create unwanted hurdles. And as I mentioned, the penalty regime is significantly going to hit such defaulters, because the excise tax to begin with is ranging from 50% to 100%. And the way the excise tax is calculated is generally using the designated retail selling price. So regardless of the fact that a producer may be producing and selling the goods for 2 dirhams, but if the market value or if the designated retail selling price is going to be 8 dirhams or 10 dirhams, the FDA or the excise tax will potentially be due on this designated retail selling price, which again is significantly going to wipe away the entire business of such excise tax players. So while we are sitting in 2024, almost end of 2024, it is of paramount importance that excise tax players, although they are only close to 1,500 excise tax players, but very important for these 1,500 on, and for certain others who have not yet thought or looked at excise tax seriously, to go forward and ensure that they comply with the excise tax law, to ensure sustaining and continuing their business, and not really falling in the trap of the audits and falling into this rabbit hole, which is endless at times. Yeah. So with this note, I'll open the floor with Ashima for any questions that you have, or any practical challenges that you are facing and you would want to share with all of us. And we can try and address a couple of these questions. So I'm going to stop sharing my screen now. Yeah. So please, I'm looking at the chat box now, and feel free to share your questions with us. Okay, so we have got a question. So could you elaborate more about the price for the excise tax calculation, as we are producing Doha or maybe Doka, and have different price in retail sales or export? So effectively, whenever we talk about any excise tax products, there is a way to calculate the excise tax to begin with. The most common way is looking at the designated retail selling price. This is a list which is published by the FDA, and you can find it on the excise tax portal. When you log into your specific portal as well, you'll be able to find it. And depending on whether that designated retail selling price or the price which is effectively used by the excise taxpayer, whichever is higher is what is supposed to be taken in that regard in terms of the excise tax calculation itself. So Rowena, yes, we will be circulating the deck just for your reference, and therefore you'll receive the slides. Iba, thanks a lot for attending, and thank you for your comments. Perfect. Thank you so much, everyone, for attending. I don't see any other questions. We'll close off. Thank you again for making room and attending this webinar on a Friday in the morning. And hope you have a great day ahead and a nice weekend as well. Thank you so much for being with us. Thank you. Good day ahead.
Thank you.
Thank you.